Hello traders, I welcome you to E-marketTubeFX, and you are with your trader Henry Ampemdakun. Today I want us to look at a top-down analysis. So today's video I'm going to guide you guys as to how you can do a quality top-down analysis that can yield profit for you as a trader. So if you're a newbie and you don't know how top-down analysis is done, or if you are an experienced trader, someone who has experience when it comes to the chart, but you've not been able to do the top-down analysis effectively to yield you that kind of profit that you are looking for, this particular video is for you. I always do my best to help you guys to understand some of these complicated concepts when it comes to this industry, Forex, so that you guys can do the technical analysis effectively and make that dream profit that you are looking for. So today, that is what I'm going to share with you, and it's a strategy that personally I use in trading. So today I'm here to show you one of the strategies that I use in trading. So if you've joined me on YouTube, you've also joined me on Facebook or any other social media handle, all I want to tell you is that do well and subscribe to this channel so that anytime I make new video, as you continue to subscribe or you like and also share, anytime I make new video, you will be the first person to watch. Then those you share my content with will also have opportunity to learn from what you are learning from E-marketTubeFX. So as a trader, as and when you open chat, what are you supposed to do? I, Henry, prefer doing my technical analysis, doing the TDA, which is the top-down analysis. So with the top-down analysis, I start my analysis from the top, the higher time frame, then I trickle it down to the lower time frame. So as you can see here, with this particular chart that you see, this is a monthly time frame, which is BTC USD. So with this chart that you see here, as a scalper, as a day trader, you want to do a technical analysis that can yield you a profit. You want to do a top-down analysis that can yield you a profit. How are you going to do this? So as you being in the monthly time frame, are you going to wait for the whole month candlestick to finish forming before you take a decision? No. As a scalper, no. As a day trader, are you also going to sit down for the whole monthly time frame candlestick to finish forming before you take a decision? No. The higher time frame is for swing traders and that of the positional traders. But as being a scalper, being a day trader, as and when you open chart, you look for a short-term opportunities on the market, then you put in your trade and you cash out and you go away. So this very moment, this video that I'm about to share, or this content that I'm giving to you, is something that I do personally, and it's something that has been giving me profit, of which today I want to share with you. I said it's a fair value gap strategy, of which I'm going to give it to you right now for you to know how you can do this in a simple way to get profit from the market. So now with the monthly time frame chart, as you can see, anytime you open a chart like this, this is what you are being faced with. What are you supposed to do? So you are looking for opportunity. So now if you come here, as you can see, let me draw my horizontal bar there. Then you look at what we're going to do next. So with my horizontal bar drawn, you draw it to enter the future price. So shows that at this point, when price got to this particular resistance, price was able to break through to get to the top here. And looking at what is happening at the top here at the moment, BTC is selling. Yes, BTC is selling. So as I earlier mentioned, are you going to sit down and watch this particular candlestick to finish its formation before you take a decision? No. So what do? You just go to you go to the next time frame, which is the weekly time frame, to see if you can identify any opportunity there. So with the weekly time frame, as you can see, market is in an uptrend. As we saw from the monthly time frame, the market is in a bullish form. When you come to the daily time frame to with the weekly time frame, if you come to the weekly time frame, you can see that market is also in an uptrend form. So you can also pick your trend line to draw your trend line, your supports there, to see how you are going to make decision on the market with regard to your technical analysis that you are doing. So this is a top-down analysis that we are doing. So if you join me on YouTube, join me on Facebook or any other social media handle, as I earlier mentioned, do not forget to subscribe, you like and share. So our trend line neatly drawn. So as you can see here, our price reached this particular resistance. Price came down to hit the support, then broke the resistance, which is now a support, then came up here. Price came back to the support that we have, our trend line, then went up. So you being at the weekly time frame, are you going to sit down for the whole week candlestick to finish for me before you take a decision as a trader? No. As a scalper, as a day trader, this strategy that I'm teaching you guys is for scalpers and that of day traders. Yes, this strategy that I'm teaching you guys is for scalpers and that of what? Day traders. So what we are seeing over here, you've drawn your trend line. You can't wait as a scalper for price to get to the trend line before you make a decision. Then also, being a day trader, you can't wait for price to reach this particular zone before you take a decision. So on the market, with the top-down analysis that you do, right from the monthly time frame, you trickle down to the weekly time frame. All this thing that you are doing, you do your best to identify opportunity on the market. You do best, or you do well to what? To identify opportunity on the market. So now let's come to the daily time frame. Let's see if you can identify any opportunity when it comes to the daily time frame, so that we can make decision over there. So this is the daily time frame. As you can see, this is the daily time frame that we are in. So over here you can see that market is also in an uptrend, just as we saw from the weekly time frame. Market is still in its bullish form. So now moving from the daily time frame, now as you can see, price came up to break this particular structure here. So we have balls here. I love doing my technical analysis using the MT5. So we have a break of structure. Market went up to this top here. Then market is coming down. So this is the strategy that I want to teach you guys. Now look at something. As a day trader, as a scalper, now being in the daily time frame, you are trading. As market trickle down or price push down to this low, let me also draw my another support down here, so that we can continue with our technical analysis. So over here, see something. So yes. So as you can see, now we have our support here. As price went up, broke this particular break of structure, which is the boss, broke this particular structure, went up, then came down. So as price reached down here, we've seen that this swing low, liquidity is taken. The market makers have swept liquidity at this low with this particular wick that came down. So as this candlestick is formed, this is the strategy that I want to teach you. As this candlestick is formed, what are you supposed to do? As you can see, we have a very big bearish candle here, which came down with this another bearish candle, which is a daily time frame with this candle stick formed. So on the market, as and when you identify some of these gaps on the market, this is what we refer to as a fair value gap. So when you talk about fair value gap, fair value gap happens in 3 candles. So inside the 3 candle, you have one at the top, one in the middle, then one at the down. The middle candle, you identify a gap there, like what you see here. You identify a gap there. So in a situation where you identify any gap like what you see here, we refer to that gap that you see here as a fair value gap. So let's pick the horizontal bar so that you can identify, to help you identify the fair value gap that I'm talking about. So this is the fair value gap that I'm talking about. This is the fair value gap that I'm talking about. So this is it. This is it. This is the fair value gap. So as you can see inside here, so let's label our fair value gap, a fair value gap in the daily time frame. We have our fair value gap in the daily. So fair value gap at D1, fair value gap in the daily time frame. So let's quickly change everything then. So let's label this is our fair value gap in the daily time frame. Thank you very much. So now this is our fair value gap. Now let's look at something. As I earlier mentioned, as price came down to sweep liquidity down here, we have this gap. As a trader, as and when you see these gaps on the market, please don't just take it as an ordinary candle. It's an opportunity of which you need to take note of, because the gap that you see there can serve as a what? As a supply zone. A supply zone like what you are seeing here. Price can reach there and reverse. So if price reach that zone and reverse, it means that it turns, not that it has happened that I'm showing you, it's something that has been playing out on the chart every now and then. So as you will be able to, as you identify the fair value gap on the chart like this, as I earlier mentioned, it serves as a what? It can serve, the fair value gap can serve as a what? A supply zone. Then also it can also serve as a what? A demand zone. So as price get to the fair value gap and is not able to break the fair value gap, and you get a confirmation, when you come down you get a confirmation, you will go to the lower time frame, then you see yourself what I'm talking about. When price gets here and is not able to break the fair value gap up to the top here and reverses, then it means that the fair value gap is solid. Then you can also join the selling move. So as and when you see these gaps on the market, please don't take it as a what? Just an ordinary candlestick formed, or it's anything. No, it's an opportunity as a trader. You need to what? You need to know. It's an opportunity as a trader. You need to know. Let me also add that on the forex market, price move for 2 reasons. Price move to fill the imbalance or gaps on the chart or on the market. Then also price also move what? To sweep liquidity. So price movement coming down here swept liquidity at this low. So all those in the all those in the buying order with their stop loss here, this price movement that came down swept the liquidity down here, swept all the SL, all the stop loss that we have down here, all swept. So price move what? As I earlier mentioned, price move to sweep liquidity. So an example is what you are seeing here. Then also price also move what? To fill the gaps that we have on the market. So an example of the gap is what we see here. But in this case, as I earlier mentioned, when you identify these gaps on the market, make sure that you draw your horizontal bar to identify, because as price move, you are looking at 2 things. It is either price will fill the fair value gap and continue the bullish move, or if it is in a bearish move, price coming from top to down, it is either price, when price gets to the fair value gap, it will fill it and continue the bearish move. And if price gets there and is not able to break the fair value gap, especially to the middle, and reverse either at the top or from the middle or the fair value gap, then it means that price is about to what? To reverse to the other side, of which you need to what? Pick a confirmation. You go to the lower time frame, you pick your confirmation, then you are good to go. So as I earlier mentioned, now you've neatly drawn, you are trading, you've identified this opportunity on the market, you've drawn your horizontal bar like this from the daily time frame. So we are doing a top-down analysis. You've identified this opportunity from the daily time frame. So you've drawn this fair value gap, neatly identified. Now let's go to the 4-hour time frame, then see what is happening there. So you being in the 4-hour time frame, what it means is that as price was pushing up and got to the fair value gap, the bearish candle you see here is a confirmation of the bearish move that came down here. Note, price movement from here to this down here all started from here. If you know, you know. I repeat, I said price movement from this high to this low all started here. So if you're a trader and you have that edge, you have that strategy that can help you to foresee what is going to happen on the market in future, that is what makes you the profit. That is what makes you the profit. So as I earlier mentioned, this bearish candlestick formed here is a confirmation that market is going to go down, because as price was pushing up, the next candle formed. We were expecting the market to continue in a bullish move, to continue filling the fair value gap that we have here. But look at the candlestick form here. This candlestick didn't close at the top, but rather closed at the bottom. If you want to know more with regard to the psychology behind the formation of candlestick, make sure you watch this video. I've made a video on how to read candlestick chart, as you can see on the screen. You can watch that video to deepen your understanding when it comes to the psychology behind the formation of candlestick. So as I earlier mentioned, this candlestick, let me zoom for you to see. This candlestick that you see here didn't close at the top, but rather close at the bottom. This candlestick closed at the top, so we're expecting that this candlestick will continue the bullish move and close at the top. Then it will be filling the gap, then it will move up here, but it didn't happen. Look at this candlestick with a 4-hour candlestick close at the bottom. So this candlestick closed at the bottom or below the fair value gap, signal the next bearish move which is about to happen on the market. So what do? If you are a scalper, you can't trade from the 4-hour time frame. So what do? You can break it down. If you are a day trader, you can also take advantage there. Then you also join the market. But in a very smart way, I'm going to show you how you can join the market in a very faster manner, so that you can be in a market before price grow fully on the chart, before the candlestick fully grown on the chart. And this is the strategy. So this is the 4-hour time frame. Let me pick a bar and put it. Let me pick a bar and put it here so that you see what I'm talking about. So this is the 4-hour time frame candlestick. This is the 4-hour time frame candlestick. So this bar is on the 4-hour time frame as price got there. Now let's go to the 2-hour time frame. So with the 2-hour time frame, now look at it. You see the 4-hour candlestick that I placed. This is the top-down analysis that we are doing. So when you are doing your analysis, me starting the analysis from the monthly time frame, of which I identify the fair value gap in the daily time frame. This is how you do the analysis. I identify the fair value gap in the daily time frame. So as I've been able to identify the fair value gap in the daily time frame, now as price go to the fair value gap in the 4-hour time frame, you being in the 4-hour time frame means that you want to have a first 4-hour pictorial view, of what is happening in the daily time frame. So moving from the daily time frame to the 4-hour time frame, what it means is that, I repeat, I want to have the first 4-hour pictorial view of what is happening in the daily time frame. So within the first 4-hour time frame, what happened? A bearish candlestick is formed, giving a confirmation of what? The next bearish move which is about to happen on the market. Now, if the 4-hour time frame is too long for you, you can trickle down to the 2-hour time frame. So if you being in the 2-hour time frame, what does it mean? The 2-hour time frame means that you want to have a first 2-hour pictorial view of what is happening in the 4-hour time frame. I repeat, you being in the 2-hour time frame means that you want to have, you said for the 4-hour time frame is too long for you. That is what you are saying. So you being in the 2-hour time frame means that you want to have a first 2-hour pictorial view of what is happening in the 4-hour time frame. That is what we refer to as the top-down analysis. You want to have a first 2-hour pictorial view of what is happening in the 4-hour time frame. Guys, I pray you understand what I'm talking about. So when this candlestick formed, with this bearish candlestick formed here, because price was doing it best, or buyers were doing it best to push price up. But look at this bearish candlestick formed. Look at this bearish candlestick formed. Let me change the color so that you can see what I'm talking about. Let me change the color to yellow so that you can see, because I placed this particular candle from the 4-hour time frame. I placed it, there's a 4-hour time frame candle, that's where I placed it. So you want to see what happens in the the next time frame. So as I earlier mentioned, you placing it here within the 2-hour, you want to see the first 2-hour pictorial view of what is happening in the 4-hour time frame. So with the first 2 hours of the 4-hour, we have a bearish candlestick formed here, giving a confirmation of the next bearish move which is about to happen on the market. So with this, you can have, if you want to join, if you're a day trader and you want to join this market, you can just put your stop loss. You can put your stop loss here. You can put your stop loss behind this supply zone. You can put your stop loss here. Then you join the bearish move which is about to happen. If the 2 hours is too long for you, you can also come to the 1-hour time frame. So let me pull this so that you see it's moved. So I want to place it on it again so that we can continue with our analysis. So now you coming to the 1-hour time frame. What does that mean? So you being in the 1-hour time frame, this is the 1-hour time frame. As and when price got to the fair value gap, this is what happened. Buyers were doing their best to push price up, but we had a bearish candlestick formed here. Then the next hour we had another bearish candlestick formed here, which tells you that the bullish momentum is weakened, which tells you the trader, as I earlier mentioned, that you as a trader, the candlesticks forming on the chart is a language that we traders understand. So if you've not watched the video I've already made, it's on YouTube, how to read candlestick chart. Make sure you watch that video to deepen your understanding when you come to the psychology behind the formation of candlesticks. Then you can also watch the candlestick pattern. The candlestick pattern is also another video, as you can see on your screen. It's also another video available on YouTube. So over here we have another bearish candlestick formed. If maybe you are not seeing it, let me remove the bar there, then you see. So we see this is a strong bullish move going up. Look at the next candlestick formed. This is a small bearish candlestick formed. Then we have another small bearish candlestick formed, a dodgy candlestick formed. There's a dodgy candlestick formed. So with this dodgy candlestick formed, it should tell you, the trader, that the bullish move, the bullish strength is weakening at this very moment, and sellers are dominating on the market. Sellers are dominating on the market. So you being a trader, quickly you should know what is happening on the market. You take the right decision, then you join the next bearish move which is about to happen on the market, then you are good to go. So please, you shouldn't waste time as and when you are doing such analysis and price reach such a POI. So that is what I want you guys to take note of. Remember, you are with E-marketTubeFX and you are with your trader Henry Ampemdaku. So now, as you can see, now we are still on the 1-hour time frame. We have this candlestick here. Now let's go to the 30 minutes time frame. Then you see we are still on the top down analysis. we are still on the top down analysis. If you join me on YouTube or Facebook or any other social media handle, remember this is E-marketTubeFX and you are with your trader Henry and Pimdako. You do well and hit on the subscription button. Then also you like, you share, then also make a comment as you continue to share my content with friends and loved ones. Anytime I make new video, they will also have the opportunity to learn from what they are learning from E-marketTubeFX. So let's get back to what we are doing. So with this being the 1 hour time frame, I said you being in the 1 hour time frame means that you want to have a first 1 hour pictorial view of what is happening in the daily the 2 hour time frame. So take note, you want to have a first 1 hour pictorial view of what is happening in the daily time frame, because you said the daily time frame is too long. So you being the 1 hour time frame means that you want to have a first 1 hour pictorial view of what is happening in the daily time frame. So with that first 1 hour, a bearish candlestick is formed. If you are also a scalper or a day trader and you think the 1 hour time frame is too long for you, now let's come to the daily time frame, what you call the 30-minute time frame. So with the 30 minutes time frame, let's look at something. With the 30 minutes time frame, now let's look. Price going up, we had a bearish move, price coming down to this low, then price reverse in the bullish form. So over here, let me draw a bar for you to see. We are still doing the top down analysis for you to understand how you can do this effectively and make profit from the market. So I've drawn this bar to note the pause that has occurred on the market. We have a break of structure on the market at this very moment. So price reversing from this high, coming down, then price going up to sweep liquidity at the top here. So there's a break of structure. So price got to this top. Then we have within the daily time frame where we placed this particular bar. Within the daily time frame, there's 30 minutes where we have this bar. The 30 minutes where we have this bar is the first 30 minutes of what was happening or what is happening in the daily time frame. Or if you are coming down to the 4 hour time frame, because we drew the fair value gap in the daily time frame, so we move to that of what, the 4 hour time frame. So this is the 4 hour time frame. So as price has gotten to the fair value gap here, this is where we place this bar. As price has gotten here, now we can't wait for the 4 hour candlestick to complete its formation. So I've explained to you why we move to the daily the 2 hour time frame as and when we are doing our top down analysis. I've also explained to you why we move to the 1 hour time frame. I said that as you move from the daily time frame to the 4 hour time frame, what it means is that you can't wait for the entire duration of the day a candlestick to finish its formation before you can join the market as being a day trader or a scalper. So as you come down to the 4 hour time frame, what it means is that you want to have a first 4 hour pictorial view of what is happening in the daily time frame. So within the first 4 hour time frame, you saw that a bearish candlestick is formed below the fair value gap, giving a confirmation of this bearish movement which you are seeing here. So as I earlier mentioned, this bearish movement that you are seeing here all started from here, of which you need to take note. So now coming to the 4 hour time frame, coming to the 2 hour time frame also means that you also want to have a first 2 hour pictorial view of what is happening in the 4 hour time frame, because you said you can't wait for the 4 hour candlestick to complete its formation before you can join the market. So you came to the 2 hour time frame. So that 2 hour time frame can be a confirmation for you to join the bearish move. You said the 2 hour time frame is too long for you. You can come to the 1 hour time frame. So you coming to the 1 hour time frame means that you want to have a first 1 hour pictorial view of what is happening in the daily time, of what is happening in the 2 hour time frame. Now you said you are a day trader or a scalper, so the 1 hour time frame is too long for you. Okay, then you are now in the 30 minutes time frame. So you being in the 30-minute time frame means that you want to have a first 30 minutes pictorial view of what is happening in the 1 hour time frame, and this is what happened. So with the first 30 minutes of what is happening in the 1 hour time frame, a bearish candlestick is formed. So over here we've gotten a liquidity sweep. I've already told you that price move for two reasons. Price move to fill the fair value gap on the market. Price moves to fill gaps on the market, the imbalance on the market. Then also price move to what? To sweep liquidity. Price move to sweep liquidity where traders have placed their stop loss. So we have traders who are in a what? In a sell order. So in that sell order, they have their stop losses here. So price coming down, then pushing upwards again, have taken off all the liquidity that we have here, or the SLs placed here. So now that liquidity swept, now we expect price to come down, and we have this bearish candlestick formed. Remember, we are doing our analysis from the daily time frame on the fair value gap as you've drawn there. So now that liquidity is swept, we also have this candlestick formed. If this is not a confirmation for you, look at the next bullish candlestick formed, then look at the next bearish candlestick formed. So with this, you can also place. So over here, there are a whole lot of opportunities. There are a whole lot of analysis that you can do here to confirm your entry. Now, you can also draw this. You can also draw this horizontal bar resistance to confirm your entry. Now look here. We already have a previous swing high here, of which price came to mitigate. So price got to this very high, and we've gotten a bearish confirmation as we see here. Buyers did their best to push price up. Then we have our next bearish candlestick, small candlestick formed here, which should tell you, the trader, that the bullish momentum is weakened. Price reversed here. When buyers did their best to push price up, we saw a reversal. Buyers did their best to push price up. There was a reversal. Buyers did their best to push price up. We saw a reversal here. Buyers did their best to sweep liquidity at this high, then reaching to mitigate the previous swing or the resistance that we have here. We've seen a confirmation of a bearish move. Then we have a bullish candlestick trying to push up. Then we have a confirmation of a next bearish candlesticks formed here. So this should confirm to you that market is about to go down. So with this, don't be afraid. You can just place your stop loss behind the resistance here, then you join the bearish move. So all that I want to tell you is that this bearish movement that you see here all started from the top here. As a trader, you need to know this bearish movement that you see here all started, a high amount of pips all started from here, this point. What is happening? So me, Henry, my secret has to do with the psychology behind the formation of candlestick, price action, and then ICT. So as and when price to get to these key zones on the market, I don't joke with it. I open my eyes to take note of price movement at that key level so that I can make the right decision, then make that profit that I'm looking for. So as I earlier mentioned, price reaching this low all started from here. All started from here, of which you need to know, because we have a liquidity sweep here. We have a liquidity sweep here. Price pushing up to the previous swing high, where we have this resistance with a bearish confirmation. Buyers trying to push price up. Then we had another bearish candlestick form here, of which we marked from the 4-hour time frame, confirming to us that market is about to go down. So if you are a scalper, if you are a scalper or a day trader, you can take advantage of this. Then you join the market. If you think that the 30 minutes time frame as a scalper is too much for you, let's go to the 15 minutes time frame. If you think that the 30 minutes time frame is too much for you as a scalper, let's go to the 15 minutes time frame so that you see for yourself. So with the 15 minutes time frame, what does it mean? You being the 15 minutes time frame means that you want to have the first 15-minute pictorial view of what is happening in the 30 minutes time frame. Yes, I said you being in the 15-minute time frame means that you want to have a first 15-minute pictorial view of what is happening in the 30 minutes time frame. So with the first 15 minutes, what happened? We saw a bearish candlestick formed. As buyers did their best to push price up, price got to the resistance. We saw a reversal, buyers doing their best. So over here we saw a pullback. We saw a pullback of the resistance, which is now the support. After we saw the liquidity sweep, we saw this pullback, buyers doing their best to push price up. Then a bearish candlestick formed. So where we marked the bearish candle move, which started from the 4-hour time frame, where we have it, that is what we are seeing from the 15 minutes time frame. What we are seeing here from the 15 minutes time frame. Remember, you are with E-marketTubeFX and you are with your trader Henry Ampimdako. So over here we have, in case you are not seeing, let me remove it so that you can have a view of what I'm talking about. This is the bearish candlestick formed. This is a bearish candlestick formed, of which we marked from the 4-hour time frame. So you take note. So placing it on it to track your top-down analysis, it becomes very simple. You can also do your back test on your demo or whatever trading platform that you have, be it Trading View or C Trader or whatever platform that you want to do your analysis. You can also do the back test there, then you confirm whatever I'm sharing with you at this very moment. Remember, you are with E-marketTubeFX and you are with your trader Henry Ampimdako. If you join me on YouTube or Facebook or any other social media handle, do not forget to subscribe, you like and share, so that anytime I make news, then also those who share my content to it would also have opportunity to learn from what you are learning from E-marketTubeFX. Now, you said you are a scalper. The 15 minutes is too much for you. Now let's go to the 5-minute time frame to see what you are supposed to do, the decision that you are supposed to make on the market. So coming to the 5 minutes time frame, let's check what happened when price got to that key zone on the 5-minute time frame. What happened? Let's check. Now we are going back to check what happened when price got there. So very interesting. When we saw the liquidity sweep here, when there was a liquidity sweep, remember the top here is where we have the fair value gap. The top here is where we have a fair value gap. Price reached the fair value gap, then there was a reversal. Price pushing down back to the resistance, which is broken, which is now support. Then a bullish move actually started, trying to push up to break the fair value gap, but didn't reach there. Then we had a bearish candlestick form, confirming in the 5-minute time frame that the bias or the buying strength or bull strength on the market is weak. So we have this bearish candlestick form here, confirming to us of what is about to happen. So over here, if you are not convinced, you can also, already we have a fair value gap here. We have a fair value gap here. But if you are not convinced, you can also draw the next bar to deepen your confirmation. You can draw a next bar here, a resistance. So price got to this high, we saw a reversal. Price did its best to reach here, there is another reversal. Then price coming down here, there is another price coming up here, you've seen another reversal happening. So as I earlier mentioned, the bearish movement you see here, the bearish movement that came down this low, from this top up to this low, all started here. This is the key, the deciding zone as and when price get to such zone on the market. That is my secret as a trader. Me, I don't use any indicator to trade. That is my secret. As and when I'm trading and price get to the demand zone, the supply zones, I don't joke with my analysis. I pay attention to price movement on that zone so that I can make the right decision and make profit from the market. So if you want to learn more about this strategy, you can just check the description of this video. You can see my WhatsApp number there. You can DM me, then I also assist you with regard to how you can do this top-down analysis, or how you can read or analyze this market, then make the profit that you are looking for. So remember, you are with E-marketTubeFX and you are with your trader Henry Ampimdako. So as you can see, this is my number on the screen. You can DM me, then I also guide you through as to how you can trade this market effectively and make that dream profit that you are looking for. So as I earlier mentioned, you can draw this, but already we are already in the fair value gap. But if you are not this resistance to deepen your confirmation, that market is about to go down. So today, this is a simple top-down analysis using the fair value gap strategy, of which we identify from the daily time frame, and we trickle down to the smaller time frame, of which if you are a scalper or you are a day trader, you can also take advantage. If you're a scalper or you're a day trader, you can take advantage of this analysis that I've done with you, which is a TDA or top-down analysis using the fair value gap strategy. So as and when you are trading and you see candlestick forming and you see gaps in the candlestick, please don't sleep. Quickly draw your horizontal bar there, the label where you pick the fair value gap from. As you can see from what I've done here, as you can see, I picked the fair value gap from the daily time frame. So as price gets there, I've done the analysis with you. You've seen the reaction of price as it reached the fair value gap, of which gave a bearish move on the market, of which you can take advantage of this bearish move. So you being able to foresee what is about to happen on the chart is what is going to make you the profit. So this is a fair value gap top-down analysis that I'm doing with you, of which I've explained things for you to understand, or if better, or still you don't get what I've taught you at this very moment from this video. As you can see, this is my number. You can DM me and I can help you to deepen your understanding when we come to this top-down analysis, or how you can analyze this market and trade it like the way the pro does. I have a community on WhatsApp, Telegram, and other social media handle, of which you can also join, so that we do this together. I've been sending signals to them every now and then from the Telegram group and also the WhatsApp groups. Also, you can also join. Then you take advantage of what we do in the community. So that is E-marketTubeFX for you. So this is one strategy that I've taught you guys, using the fair value gap to do the TDA, the top down analysis. Then you too can decide when you are supposed to join the market and when you are not supposed to. So if you're a scalper, you can take advantage of this video. If you're a day trader, you can also take advantage of this video, so that you know when you can enter the market and when you are not supposed to. Now let me also take you through another strategy, of which you can do, or you can put in place on the chart to join the market, being a scalper or a day trader. Let me take this particular I want to take this horizontal bar off. Then we do another analysis, so that you too can know what you are supposed to do as and when the candlesticks are forming on the chart. I've already told you that the candlesticks that you see on the chart as and when they are forming are not just candlestick just printing on the chart anyhow. They are telling you something. These candlesticks are communicating with you as a trader, of which you need to understand, so that you can use it to make the right decision on the market, then make that dream profit that you are looking for. Now let's look at something here. I'm about to teach you another strategy, of which can also help you to make profit from the market. Yes, so now we are done with the fair value gap strategy. So as you can see here, we have a fair value gap here. We also have another fair value gap. This is the fair value gap that I taught you, that as and when you see such a fair value gap, just draw your horizontal bar. As price approach the fair value gap, you use it to take decision. So we are now done on that. Now let's look at something. As price moved from this high to this low, so from the fair value gap, we realize that market came down. Let me draw it again, so that you can use to continue analysis. So as price got to the fair value gap, you saw a reversal. Then there is another fair value gap. I hope you are seeing what I'm seeing. the fair value gap strategy that I taught you of, which brought price down. We are in the 4-hour time frame. There's another fair value gap which push price further down, of which I'm going to identify, help you guys to identify, so that you know how solid this strategy is. You know how solid this strategy that I'm teaching you is. Now look at it. Look at, there's another fair value gap here. Look at it. See, there's another fair value gap. I said fair value gap happens in 3 candles. We have 1 candle at the top and 1 at the bottom. So the middle candle, there is a gap. We have what? A gap in the middle, what do you call it? In the middle candle. So that gap is all referred to as what? The fair value gap. And price in future will move to fill that fair value gap. So as and when price reach the fair value gap and is not able to fill it, you will see the reaction. It is either price will fill it and continue the bullish move, or price will fill it to continue the bearish move, or price will reverse as and when it reach the fair value gap. So this is another fair value gap identified from the 4-hour time frame, of which confirm the what? The bearish continuation, as you see here. So with this, mainly you identify quickly as price gets there with this bearish candlesticks forming below it. It's a confirmation to you that market is going to continue to push down. So if you want to scale in, so there are some traders as and when they want to scale in. There are some traders as and when they want to scale in. Immediately they enter the market, then they start injecting their position or placing their position. No, we don't do that. We don't do that. On the market, we test waters. If I say on the market, we test waters. On the market, we test water just like you trying to bath warm water. After you boil the warm water and you mix it with a cold water, you can't just pour it on you. First, you just touch it with your hand to see how warm it is. If it is too hot, you mix it up with the cold water. So before you pour it on your body, you first test it with your hand to test the temperature of that water before finally you pour it on you. So on the market, we do the same thing. So after you join the bearish move coming down, and over here you've identified another bearish move going down, that is where you also scaling. You enter other position that you want to enter. So with this, what am I talking about? What am I talking about? I've placed the bar there. Now let's go to the 2-hour time frame. So with the 2-hour time frame, this is it. So after you being in the bearish move coming down, joining the bearish move coming down from top here, then price reaching here gives you another confirmation that market is about to go down. You can enter another position. Or if the 2-hour is too much for you, you can come to the 1-hour time frame, giving you a confirmation that market is going to go down. You can enter other position. As market go down, you continue to be in profit. If the 1 hour is too much for you, you can come to the 30 minutes time frame. So with the 30 minutes time frame, after you get a confirmation over there that market is coming down. So as you can see, this is a shooting star formed here. So with this bearish candlestick form gives you a confirmation that market is coming down. You can enter other position. Already you are in a sell order at the top. You are just scaling in because you've identified another fair value gap, of which is pushing price down. Price got there, so able to fill the fair value gap. Price reverse is going down, so you can join the bearish move going on. So when you come to the 15 minutes as a scalper, you go to the 15 minutes. So with the 15 minutes scalper, you've already taken some profit. Now you've identified another opportunity of price coming down. You've identified another opportunity of price coming down. You join the bearish move, then sweep. So price coming to this low, you can just sweep profit, or you can remain in the market for a while. As price continue to come down, you take profit, or you can go to the 5-minute time frame, then you do same. So guys, this is how we do the top down analysis. So if you're a trader, a naked trader like myself, I don't use any indicator to trade. What I'm teaching you is how I trade. I don't use any indicator to trade. If you want to learn more about this strategy that I'm using to trade, you can DM me. There's my number on your screen and my WhatsApp number. You can just DM me. Then you can also join the community and learn more. You can join the community and learn more from this strategy. This is E-marketTubeFX, and you are with your trader Henry Ampemdaku. Remember, do not forget to subscribe, you like and share, so that anytime I make new video, you will be the first person to watch. Now, There is another strategy I want to teach you. There is another strategy. Today is for strategies. Yes, there is another strategy that I want to teach you. There is another strategy that I want to teach you. So this video is packed. This video is packed. Now, what am I talking about? Let me remove this. Let me remove this thing there. So we are now in a 4-hour time frame. You are a trader. As price got to this point, you want to identify opportunity on the market so that you know what to do. So price has gotten to this zone. As you can see, price is consolidating at this zone. You don't know what to do. There is a way out. As and when you are trading and you see price consolidating in this form, there is a way out. There is a way out. So now let's move to the 2-hour time frame. So we are now in the 2-hour time frame. We are now in the 2-hour time frame. Now, so within the 2-hour time frame, you can draw. Let me zoom small. You can draw your horizontal bars to guard the price movement from top to down. So at this moment, this is the horizontal bar that I'm talking about. You can draw your horizontal bar like this. You can draw this horizontal bar to guard price movement from top to down. Let me draw the next one so that you see what I'm talking about. You see what I'm talking about. So we have another candle. So we have our resistance at the top. We have our resistance at the top. Then we have our support at the down. So this is what I'm talking about. So this is the resistance, as you can see at the top here, and this is our support, as you can see down here. So price is consolidating, and as and when price is consolidating or price is ranging, what it means is that buyers and sellers are in equilibrium. Yes, I repeat, as and when you are trading and you see price moving, up and down, it will hit a zone at the top at the resistance, then come down to support, then it will reverse. As and when price is moving that back and forth, what it means is that buyers and sellers are in equilibrium. Their powers are equal. No one is bigger than the other. They are struggling. So in this case, as they continue to struggle, it's like you putting a cat in a sack. It will be pushing back and forth, trying to have its way out. So immediately any of these zones, be it the resistance or the support, is broken, meaning the cat is out. Now price has moved from the phase of the ranging or consolidating phase to a trending phase. So there's a strategy that we trace. So this is the 2-hour time frame. You can come down to, after you draw the horizontal bars, the resistance and that of the support, you can come down to the lower time frame. So there's a 1-hour time frame. So with a 1-hour time frame, if it is too high, you can come to the 30 minutes time frame. So now let's look at the 30 minutes time frame. What is happening? So with the 30 minutes time frame, you see what is happening down here. So with the 30 minutes time frame, look at something here. Yes, so I've touched the equal highs. At least when we are drawing the horizontal support and the resistance, like the resistance that I've drawn here, it should touch at least 2 weeks. It must touch at least 2 weeks. So this, at least I've gotten one here. We have another swing high here. We also have another swing high here. So we've gotten more than 2. So it is solid. Then over here too, we even have more than the 2. So as you've been able to do this, now let's look at what happened. As price came down, thinking that the market will continue with a bearish move, break it so that we'll have a bearish movement down. You saw a bullish move, the resistance that we have at the top here. So now we have price at the top of the resistance. The resistance now turned to a support. Now, as and when you see this happening, you merely price break the resistance. It can be the resistance at the top or it can be the support at the down. Immediately you see price breaking the resistance, you don't join the market immediately. The best way you can join, or the best time you can join the market, please take note. I repeat, the best time you can join the market is to wait for pullback. So as price, so you see newbies in a hurry, immediately they see price breaking a resistance or support, then they join. If you do that, market can reverse and come back to your SL and take you out of the market. So the best time you can join is to wait for a pullback. So after price breaking the resistance, you've seen that market went up, then this is the pullback that I'm talking about. Market reversed back to the resistance broken, which now tend to be a support. So with this, we are now in the 30-minute time frame. You can come to the 15 minutes time frame. So within the 15 minutes, meaning you want to have a first 15-minute pictorial view of what is happening in the 30-minute time frame. So as price got here, price did it best to come down. But look at the candlestick we have here. We have a bearish candlestick formed beside a bull candlestick formed beside the bearish candlestick that you see here. Let me zoom so that you can see what I'm talking about. We have a bearish candlestick, a bull candlestick formed beside a small candlestick here, a bull candlestick formed beside the bearish candlestick formed here. So it gives us a confirmation that market is not coming down, or price is not coming down. Because if sellers have the strength to continue pushing price down, the next candlestick form should be a bearish candle which should close below the resistance, which now tends to be a support. But we have a bull candlestick formed here, giving us a confirmation that market is about to reverse. So with this, you can just put your stop loss. If this is too tight for you, you can bring your stop loss to this low. You can bring your stop loss to this low. Then you join the bullish move. So the pullback that I said you should wait for is what you are seeing here. So price movement from this low to this high, price movement from this low to this high is all profit for you. So you join the market here. So it's all profit for you. So price movement reaching this top all started here. So as I earlier mentioned, whenever you see range broken, price breaking a range, either at the resistance or at the support, wait for pullback. As you can see here, so mainly you identify the pullback, then you join the bullish move. If the pullback happens below the support, which now tends to be a resistance, then you join the selling move going down. So this is what I want to share with you. Remember, this is E-marketTubeFX, and this is your trader Henry Ampem. I always do my best to explain some of this concept, which is quite complicated in the market, in a way of which can help you newbie or a trader struggling to make profit on the market to comprehend some of these things and do it right on the chart, so that you can also make the profit that you are looking for. Remember, I've also told you guys that the knowledge of the market is more important than the money that you deposit. If you have fallen in love in this market, in this forex industry, all that I will tell you at this very moment, to end whatever I'm sharing with you at this very moment, all I want to tell you is that please do not be in a hurry depositing. That 100 USD that you have, that 200 USD that you have, do not be in a hurry to deposit in your broker and start trading. Do well and use that money to seek knowledge. These professional traders that we see them making billions of USD every now and then, we see them on social media posting their wins and stuffs. Please, you are not seeing their struggle in that win. You are not seeing the skill, the how they've toiled. You are not seeing that. They humble themselves, they allow themselves to be taught. This market is not a market where you can gamble. I repeat, you cannot gamble on this market. If you have experience when it comes to betting, don't bring it to Forex. Don't bring it to the crypto market. Don't bring it to the commodity market. Don't bring it to the indices market, because over there we don't gamble. We apply whatever knowledge that we have acquired on the market, we buy. So this thing that I'm sharing with you, it is something that myself I have backtested. I learned, backtested on the chart. I've written down all the results as and when I backtested on the chart, written down the results, and as it keeps playing on the chart, it keeps confirming what I have done. So as and when I see this candlestick forming on the chart at key zones, I know how I'm supposed to trade it. So as I earlier mentioned, whatever money that you have, I'm not telling you to come and give me your money. or give your money to another mentor or a trader or expert trader to teach you. But I'm encouraging you that if you allow yourself to be taught, if you go through the learning process, the mistakes which other traders did, which caused them to blow several accounts, their hard-earned money. I'm not saying that you are not going to lose on the market, but yours will be minimal. You are going to avoid so many mistakes which are being done by other traders, because you have someone who is guiding you, you have someone who is coaching you, you have someone who is helping you to have a better understanding on the market. So that is all that I want to share with you. So if you have anything, don't bring it to the market, because this market requires skill, it requires patience. This market is a market that moves money from traders who are impatient to traders who are patient. I repeat, this market is a system that moves money from traders who are impatient to traders who are patient. This market is a system that moves money from traders who are indisciplined to traders who are disciplined. Then also, this market is a system that moves money from traders who are not knowledgeable to traders who are knowledgeable. So if you want to do it the right way, this is my small experience that I'm sharing with you, that do not chase money on the market, but rather chase knowledge.